Good morning, everyone. Okay. Nice to see everyone active this morning and typing in there. Let's see where we are at. So it definitely looked like there was a crack in the armor yesterday. It was pretty much a power downtrend all day, intraday. Until the end, there was that blip up there. So the start of the turning point, if we're assuming that this is a high point, it's moved up enough, of course. The only fly in our bearish scenario was the fact that the option traders haven't totally committed in a big way as they typically do at the turn. But we'll see what maybe tomorrow can get them, this gap up here. And we want to look at how significant this gap up is relative to the move down that happened yesterday. So these internet stocks had a great run off of the low. And one of the few sectors that actually exceeded these highs here. And now it's actually up at the 200 MA. So that's a pretty good reversal yesterday. So I'm going to keep an eye on this sector to see what kind of follow through there is or the lack thereof. And so I don't have much data here, but one dot here, pre-market on the 60-minute chart. But we can see that the hourly chart has violated the prior swing low. So the depth of retracement here is no longer in an uptrend. As you can see, as it went up from here, it never violated a prior swing low after making a higher high. And so up it went. And yesterday, you can see the selling, and it just continued and broke through this. So now what we want to look for is a lower high reversal. Obviously, from the bearish point of view, we don't want to see it go back up above here. And I would like to see it break today's low, yesterday's low today, rather than an inside day, excuse me, but we'll see. I definitely don't want to see this going sideways for a few days because that could lead to, a higher high. And having a stop initially above this high is probably, from depending on how you share size it, definitely the right thing to do. But I certainly wouldn't be surprised if it went above it, only to see it reverse back down again with some type of a failure pattern. But we'll see how it plays out here and where this day ends. Let's go through the other markets, which was pretty much the same. You have this gap up day and then the gap down and the bearish day that was there yesterday. Now it's bouncing up. And this bounce really isn't anything of significance based on the depth of this drop. So ideally, the extent of the bounce would get to about there, give or take, of course, and roll back over. And so that's what we'll be watching for here in the morning once things start trading to see how much follow through or not there is at the open with this, positive move up off of the low, which I said yesterday. Look, the hourly charts are on support. The 5 minutes were in a downtrend pretty much all day. The selling was relentless. So it is to be respected from that point of view. However, it declined down toward support. And my exact comments were, okay, you can initiate shorts here or call bear, call spreads, but it would be no surprise to see some type of bounce just based on the technicals of getting down toward the support level on the 60-minute. And so that's what's happening now. And now we need to see if the sellers want to show up again today and roll this back over. Q's a bit more, let's just say, potent selling, convincing selling. It broke through these lows here. But again, it fell all the way down here into this support level, and now it's bouncing, and we want to see the lower high and roll over. Whether it chops around here and initially starts to make a trading range, just based on the depth of the retracement. This was a pretty big move for the day. Just look at the size of the range here relative to these bars. It's a bit bigger. And, when we get a move going lower, I love to see some kind of shock. And this is a little bit of a shock because, when this had moved up on Friday, it was a narrow range day, but it began to accelerate the move and it kind of looked like it could continue higher. So in addition, on Friday, no one ran for the exits near the end of the day. The buyers just stood their ground. And so now it was a bit of a shock that it gapped down, and maybe that's why the selling continued. So now buyers have their chance today to try and save the day and see how far they can retrace prices into this red bar. And that's what we want to measure, and how we do it day in and day out is to look at a red bar. And it's not, let's say, that convincing because it's got a little bit of a tail. But in any event, let's just assume that it did. Well, 50% of the range of the red bar. Ideally, it stays below that. And if it does that today, it increases the probability of a roll lower. And that may come tomorrow or today. We'll just see how it all plays out. Pretty much the same thing in the Russell. Move up into some resistance, the gap up, the gap down, the selling. However, it didn't really violate any significant support here on the daily. So is it going to keep dropping, or is it going to rest here and go sideways? That's the hard right edge of the chart, as we call it. We don't know. So if we're going to initiate shorts, or you have some shorts on, stop above the high, see what happens. It's a logical place to initiate shorts. Yesterday's selling was consistently to the downside. So this was yesterday. You can see it just continued to trend down throughout the day. It was pretty much the same everywhere. Good morning. Transports looked great, like they could go higher on Friday, gap down. But this is one red bar after a breakout. It doesn't mean it's going to collapse. The hourly here is still in an uptrend. So it's not like an all-out, bearish signal, short away. It's a no-brainer. It's not a no-brainer, especially in this market that has been pretty resilient at coming back from any little attempts to move down. So we'll see how it goes. And maybe it likes the fact that the government is partially shut down and, doing nothing. So I guess they're kind of toothless for the moment. Maybe that gives some confidence to the markets. We'll see what happens when and if the children decide that it's time to get along. Same thing in the Dow, same pattern, gap up, gap down. And this was a little stronger. And as you can see, it's actually exceeded this prior swing high here yesterday. Well, it's not yesterday's high, but that pre-market area there. And so a little bit of relative strength. And futures, I'll just go through them quick. Just choppy consolidation. We've got our resistance area over here. So if you're trading the ES, this is where you want to see the sellers show up, right between those two lines, and then roll back over again. It's broken the uptrend, and that's what should happen. If it gets back above here, it's going to be questionable as to the, how soon or when it's going to roll over, whether it gets back up to the high. Keep that in mind. Qs stay weaker, well below the bottom of that area. So that's where the relative weakness is. You can see the Dow has pushed up through it. So bonds held yesterday. Now today, with the market strength, they're back down again. So again, I guess repeating, but not totally out of the woods here from the, taking a bearish point of view. Weekly charts are in downtrends. Let's go back to the spiders, and we can flip to that for a second to reinforce that. So prices are in the right area to roll over. We don't have a convincing or extremely convincing roll yet. I think that looks like the beginning of it. And in one of my comments in the morning, talking about a high point, I mentioned a double top here or an M top would be ideal, because the thinking behind that is, the 60 minutes up, trending up, you have the beginning of a turn, and it's the same thought: M top, head and shoulders top, some type of consolidation. Is that over a period of time, buyers lose confidence? So they're confident as this move started. Now, maybe they're still confident, right, that it's going to continue to go higher. Who cares about the weekly downtrend and things that we've talked about? But as time goes by and it begins to rattle around up here, they begin to lose confidence, just like any of us would if we were long. And you see prices try to push higher and they fail and come back down again. And that kind of information begins to, confirm your fears, if you will, as to the trend not continuing if you're bullish. And all of that begins to unfold, and then eventually you get a break. So a longer period of consolidation rather than a V top is more potent and higher odds of pushing prices lower with some authority than just, making that V or there and pulling back. Oil kind of hanging out there, but those oil stocks got shellacked yesterday. A lot of them with similar price action to the markets, and not all of them, but a consolidation, which was bullish. And this is a bottoming pattern. They tend to be treacherous with this kind of price action, but that consolidation, no doubt, was bullish. It ran up, created a void. It was near resistance, but it refused to go down. It gapped lower here and running back up again and consolidated and breakout and slam. So if you're long, it's got to be a shakeup and questioning what's happening here. And probably many, would have a stop below the base. And so that's going to be a pretty significant line in the sand. This could be a wiggle and it rips back up again, but that's definitely a shock pattern that's going to shake the confidence of those that bought that, as it would even if it wasn't an uptrend. And gold, kind of correcting here, pulling back. We'll see how far that goes. And here's oil. And I think that's about it. We covered transports. You see what's happened here, and that's one of the ETFs for oil, and so on. Okay. Just looking at the comments. I guess Pat is doing her own thing or not here. I'm not sure. Neil, you want to look at Tesla for you, which it's at support, but clearly that's a big crack in the armor there. And your long spread, well, maybe you'll get lucky today, since it's at support, but you can see it's down here. So there's no love for it. It's in an area where it could bounce, but it isn't happening. Down to 292.
Well, and actually, Greg, when you just showed your hourly chart, that's a great example of trading counter trend moves from a bearish higher time frame. Is why we look for a retest, and you really never got a compelling hourly reversal.
All right. One of the things, Neil, trying to, and I wouldn't tell you something if it wasn't true to try and make you feel better, in the sooner, but, this kind of a pattern, gapping down as this has, coming from here and moving down and gapping lower, it would be no surprise to me to see this to be some kind of a fake out move under these lows. Now, we don't just assume, I just know by historical patterns that that's a possibility. So clearly it would have to turn around and get back up above this little pre-market high here. And that could be a great sign for at least stabilization or a bounce. But, clearly we all saw what was going on that day, and it was pretty nasty. So from the bearish point of view, if it just hangs around here for a couple of days and maybe the market bounces a little bit, this thing's probably in for a real drubbing because it's got a void below here. I'll try along the way. And if you have any questions throughout the day on this, just throw them out there. We're happy to take a look. All right. All yours, Dan.
All right. Thanks. All right. Do y'all know why the Dow is acting the best pre-market?
You asking me, or are you going to tell us?
No, just asking everyone.
Huh.
Kind of just as a common sense type of question. Answer is earnings. Exactly. There's some big, because it's two reasons. There's only 30 stocks in it, and they're price weighted. It's not market cap related. So the expensive stocks that make big moves can move the tail of the ETF. So diamonds here, look, it's gapping over yesterday's high. So diamonds are the most bullish. Open trades, we put on, and I said the hourly's extended and on support, but this was just, Greg said, a power day. So I think it was right around here. We put on a bear call credit spread for next week, both on the spiders and Qs. So there's nothing to do. We're looking to add to the position. We have Verizon, short. Procter & Gamble had earnings, and we closed into weakness. And look at this beautiful out we did. I think we covered, half around 89.25, and then we moved our stop over this. I said that the market was holding, so if you were day trading, that was the time to close all trades. So that was a fantastic out on the short. Now in terms of a new trade, 94 and change has a price void. So that's worth watching. Sure. And when on earnings, I love selling put spreads and directional. I love directionals too, but when you have a big gap and we get the spike in volatility on earnings, that's just my favorite, unless it's a pro gap. Disney, we're short the stock. Tandem, we have our 25% core long as a covered call. Yeah, a bunch of gappers here. This one's pharmaceutical, PCT. So there's not a compelling gap anyway, and I don't trade them. I mean, you could day trade, but I didn't even see a day trade set up there. QSR, 6150. So I got to go to my weekly chart here to see how far that's gapping. But, on the weekly chart, it's a gap from an extended move. So that's more of a gap and crap. Logi, this looks like it trades like an ADR, but gapping up to $35, which is right here. This could be, and pre-market's holding well. This could set up a fantastic day trade long. I'm going to put that in the window. Symphony, I heard on the news somebody's buying their credit card division or whatever, and it's gapping up pretty big. There's no setup. TME, this is one of those Tencent new IPOs, Chinese stocks, nothing to do right now. But here was your entry. What's today, Wednesday? We had a holiday, so that's last Friday. You kind of had a triple retest, even though it made a newer low here. There was your resistance. It was a gap breakout. we'll watch that on a pullback. I like IPOs once they settle down. UTX 118. So it's gapping right to resistance. There's nothing to do. CMCSA earnings 36 bucks. And you know, just visualize it. You don't have to get out your calculator or fib lines. It's a deep retracement gap, but there's no pattern. And I don't like the pre-market got slammed down. That needs to heal. Abbott 7050 gapping down, total mess. KMB earnings gapping down. So I like that one. I'll put that in this window. There's a short watch. Win 112.85. There's nothing, but I like the new low weekly. Yeah, hey LaDon, that's the very next one I was getting to in my minder. So when we have to keep on our list, if it can just churn here and go sideways, then this weekly, next target is this. Well, your first target's this ugly gap and slam, but you know, next target there, 126, so it has some room. IBM, it's a bullish gap. It still has a price void, but it's excessive. It's gapping up $10. And when I call a gap excessive, it's just common sense. Plus, another clue is I'm looking at this daily chart, and I can't even see on my scale where it's gapping to. I gotta go to my weekly. So it's not a tier one. It's bullish pre-market. Look, that's bullish action so far. So maybe we set up a day trade. Cough, 79 bucks. That's a bearish gap. We'll watch it. Ameritrade 56.20. It's gapping up. No pattern. ALB. So now I'm into some leftovers. We found this yesterday. Relative weakness. It's a bearish 1, 2, 3 on the monthly. Whiskey Bravo. I would love a 1, 2, 3. This was a crack of a descending triangle on the weekly. These are all just leftover. Ross. And then you're going AYX. It's in a bullish uptrend, daily, weekly, monthly. I'll keep it on the list. X-ray I still like. This might turn into a day trade. X-ray. I'm going to put this in the window. Here's VXXB, which is going to be, it's the new Barclays volatility ETF that's replacing VXX we were talking about yesterday. Doesn't have any options right now. There's pot stock, oil, UNG is gas, CGC is extended, old Tilray, no pattern. But now you can see this is a bearish, it's kind of an upside shakeout on the weekly chart. 1 minute to open. Tesla, that's a bearish 15-minute chart. Look at that. The only bullish, we actually did talk about this yesterday. A trader brought it up. And I did like this gap pre-market to resistance. In pre-market, it had a good pattern. But then it gave you no setup and the market turned weak. And so I remember telling trader or whoever else was interested in it, all bets are off. Got no interest. Okay, well, let's go back to it then. Google here, that's a bullish pre-market. You know, you might get a day trade out of that. Markets are holding right now. But don't get too excited. It's only a few minutes, few seconds after the bell. LaDon, wanna, does that mean you're looking to enter or you're already in it? Oh, okay, when the 5-minute setup comes. All right, well, that's a very interesting question of multiple time frames. The smaller time frame you use, the higher risk it is. So this is an excellent discussion. A 5-minute bullish pattern is really a sell setup in a larger time frame. Do not fight this. Do not fight the bearish 15 or 60. You must wait at least for this to get back above the 20 MA, to have an hourly double bottom or higher low, higher high. Then you can go down to a 5-minute chart for your entry. Does that make sense?